Hello, Dan Armstrong with Armstrong Real Estate Company here again with another Friday chat. This is Friday chat number 2. So excited about doing these. So today I want to talk about mortgage interest rates and what it would have to do with you and why you should care. Because if you haven't heard, the mortgage interest rates are at all-time lows. As a country, we've been measuring mortgage interest rates for probably 50 years or so, accurately measuring them supposedly since 1971, but we have a good sense of what they were for the last 100 years, maybe more, and never ever that we know of did we have lower interest rates than today. So what does this mean for you? Why should you care? Well, you should, I think, because it means your buying power is absolutely amazing right now. And I just wanted to give you a couple examples of this, because if any of you out there thinking about buying a home, I hear a lot of thoughts about this. There are people that think, well, it's just too expensive right now, or there's too low of inventory right now, which are true. Prices up high, inventory levels are ridiculously low, which makes it hard for buyers. But think about this. As of today, in El Paso County, which is my primary area, we have an average selling price of $320,000 for a single family home. So let's just use that number. If you were to buy one of those today, $320,000, and you got a loan with 10% down, let's just say at today's rates, which I'm just going to say averaging, which is 3%, which, oh my gosh, historically, that is ridiculous. Even like 15 years ago, 18 years ago, I remember I bought my first home and I had a 6.5% rate on my mortgage. Seemed very normal to me. Those of us that are a little older that remember the 1980s would have said, holy crap, that's an amazing rate, because those rates were in the teens, like 13, 14% for certain periods of time during the 1980s. But a lot of the younger home buyers right now don't know anything about that. And we've been a little bit spoiled by these low interest rates. So historically speaking, this is an absolutely fantastic time to buy a home. So let's just take that $320,000. You buy that house right now, you get a loan, you put 10% down at 3%, which is about average. I've even heard of some in the 2s, but anyways, for owner-occupied home loan at 3%, you're looking at $1,650 per month. That's pretty good, actually. I remember when I bought my house back in, it was 2002, so that's 18 years ago. I bought it for $160,000, which seemed like a lot of money to me back then. And my mortgage payment was $1,380 or something like that. So I don't remember the exact details, but that's about what it was. So to think that double that, because I bought mine for $160,000, double that, that's $320,000. It's only a couple $100 more. That's crazy. Thinking about that, if we were to apply 6.5% right now and you bought a $320,000 home, you'd be paying about $2,300 a month. So, and that's more normal actually. So the buying power today is crazy. If we take 6.5% and we say my budget is $1,650 per month, you only could get a house at $230,000, because that's the equivalent of what that is. So thinking about that, if your budget is $1,650 a month, and that's the max you could do, you know, if the rates were at 6.5%, which is a very normal rate, you'd have to buy a house at $230,000. Today you can get one at $320,000. So while some would say, oh my gosh, house prices are so high, well, because of the low interest rates, your buying power is $90,000 more. So that is pretty cool. Some are suggesting, or maybe waiting. I'm gonna wait until prices go down. That's an interesting strategy. And for some, that's a good strategy. If you have cash, that might be a good strategy. But if you're getting a mortgage and you wait a while until prices go down, maybe rates go back up. Because here's the reality. Interest rates can't stay this low forever. It's just not feasible. Banks would probably collapse because they aren't making any money when interest rates are virtually zero. How could you run a business on that kind of return? You can't. And so banks can't handle it. The general economy couldn't handle that. Historically speaking, stimulus packages are nice. Tax cuts and all those things are nice, but there's a cost. Our country's borrowing a ton of money. taxes are gonna have to go up to cover a lot of those things, and so there could be some negative effects in the long run of things like this. So what I say is, hey, this is fantastic for the right now, and you can get a house. You know, you're borrowing almost for free. Money's almost for free. They're giving it out for free right now. You have to pay it back, but the lending it's like free money. So if you're thinking about buying a second home or investing, what a great time to do that, because if you waited and you had a higher interest rate, you know, you're losing out on about $90,000 of value if we take the example from before. So my thought for today is that if you have thoughts of buying a home, this is a fantastic time to do it. And the reasons are, as I said, you know, the interest rates. I just can't, you know, stress that enough. I mean, what a great opportunity. So while some of the other factors are challenging, higher prices, a really competitive market, but look, you know a good realtor. If you're watching this video, you know a good realtor, so I can help you. So give me a call, or if you know somebody else who needs help through that process, this is what I do. And it can happen. We're helping people get houses. The loans are amazing, and it's a great time. So that's what I think today. We look for the positive. There's great things to be excited about. And if that's helpful to you at all, or anybody else you know, let me know. I'd love to hear your thoughts. And if there's anything I can do for you, I'm always here. Thanks.